All of these banks understand exactly what they're doing with inflation, and they understand exactly what gold is. But in order to kill that bird, along with all of the other birds relating to this new settlement status that the BIS is behind the most powerful bank in the world, it's setting the stage for a massive gold revaluation, which will not only allow you, as you've said many times, to survive, but also to potentially thrive. If I'm right, those few people who are holding gold will thrive. And when we talk about silver, look, let's not ignore silver. We'll talk more about it, but it is being wickedly accumulated by countries like India. I wouldn't forget about silver. It is not a tier one like gold, but it is also something that I believe should be characterized as strategic. And we're on the cusp of some very big things. And I think gold and silver and the dollar, those three things that we focus on, will have a profoundly different view. All three will in the coming months ahead. But you could argue it's a very long fuse and it's been lit. How long before it hits the firecracker? Don't know. But it's not good for the dollar. It's not good at all for the dollar long term, because you now have legitimate alternatives, if this grows, that have not been around for the better part of over 50 years.
In today's episode, we bring you the best clips of Andy Schectman for the week. We watched hours of footage so you don't have to. Andy shares his insights on the recent macroeconomic events and explains the recent price moves in gold and silver. There has been plenty of news in the precious metals space, and I think Schectman hits the nail on the head on this one. If you're into gold and silver, this video is for you. Later on the show, we'll cover the latest news. But first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Hope that Bill's right and that we see it start to move up again in its next leg. But this is one of those deals where, you know, if you haven't learned patience yet in this industry, you never will. And it teaches you to try and find optimism wherever you can. But indeed, I think, look, the global demand for silver is not stopping. It's just hard to see it and notice it here in the United States, where the public really has not participated as much as one would think in the rally. In fact, you could argue that it is as off the radar screen now as it's been in the last 3-4 years to the public. At the same time, the central banks like India are massively accumulating it. And the common theme with all of the accumulation we see by these central banks is repatriation. Now, I know more of that is applicable in gold, where India bought 1.5 times the amount of gold they did all of last year in the first 4 months and brought it all home. At the same time, brought home 100 metric tons they've held at the Bank of England since 1991, I want to say. But I think the same thing is true with silver. It's just assumed. And when you look at all the silver that India has bought, you know, well over 600 million ounces in the last couple of years, and now the increase in the amount of silver, I wrote this down, that the amount of silver that they've been buying from the United Arab Emirates is up 654 times in the past year. That they bought $2.2 million worth between January and April of 2023, yet over the same time period here in 2024, 1.44 billion, a 654-fold increase. So you're seeing a drive by these very large, sophisticated money centers in the central banks to accumulate commodities like silver, like gold, to repatriate them, to do it in ways that really aren't being reported too much in the Western media. And I think it's interesting. I look at it again as a very big contrarian indicator that the big sophisticated money is accumulating, and at the same time the public here isn't. And again, we're seeing large deliveries off the Shanghai Gold Exchange and off the LBMA and off the COMEX. So, you know, I guess we'll have to see. But yeah, I think the trend of higher silver, just based upon the central bank interest in purchasing, one would think ultimately goes much higher, regardless of what short-term fundamentals look like, regardless of the pullback that we've seen. As far as I'm concerned, nothing's changed in a world that seems to be getting crazier by the day. And again, no evidence to support this, but maybe they realize that the ability to rinse, wash, and repeat, as they've done for so long, is getting old and long in the tooth. And one of these days, they're going to put so much pressure on the managed money that they too capitulate, go short, sell their longs. And then when the commercial banks have all of those positions in hand, their long positions covered the majority of their shorts, they won't short the rising market. There will no be rinse, wash, and repeat, and it will run to the upside. One would think in an environment as crazy as this is globally, geopolitically, that it would be very dangerous to have these naked short positions the way that they do. And but yes, to your point, typically seeing a position where the commercial banks are that short is usually not a good sign for what silver's going to do in the near term.
In today's news recap, your silver to the moon. Continuing inflation may be crippling consumers, but it is doing wonders for giving silver back its luster, with the precious metal gaining over 34% in the past 6 months. In late May, silver hit its highest point in 12 years. Maria Smirnova, Senior Portfolio Manager and Chief Investment Officer for Sprott Asset Management, says silver has been playing catch up to gold's rally, while gold has been running for longer. In terms of percentage gains, the safe haven metal has only advanced 17.6% in 2024, to a peak of $2,440 in May. Smirnova says both metals have been buoyed by the prospect of easing monetary policy in the U.S., rising geopolitical turmoil in the Middle East, and central bank buying, particularly from China. Silver faced several headwinds in 2023, most notably rising interest rates and slower economic growth in both the U.S. and China. She says, while the physical silver market was robust in 2023, Western investment demand was tepid, with silver bullion ETFs shedding approximately 50 million ounces during the year and representing more than 6% of holdings. Looking ahead, we expect silver prices to continue to improve, driven by low interest rates, more robust physical ETF purchases, and increased industrial demand. The Silver Institute sees silver demand rising 2% this year because of its dual purpose as a key element in the clean energy transition. Now we'll show you the best clips of the latest interview, but first hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily recaps, and check our description for more info and full vid credits. Enjoy the episode.
Times over the last few months, it's now becoming a reality. And it's you need to understand, you need to listen to the verbiage here in the statement, because it's the exact same thing that they understand with the commodity markets. And this is why we're seeing so many deliveries. And I'll answer this question in a moment, but just like we're seeing all of the gold heading to Hong Kong. Remember, the CME Group created a contract in 2015 that allows for exchange for physical to be delivered to Brinks, Hong Kong, which is a COMEX vault, and they only keep taking kilo gold bars. Ironically, no, it's not, because the Shanghai Gold Exchange trades in kilo bars. The COMEX trades in 100-ounce bars, although their mini contract is kilo bars. So when you see, 500 plus million in gold delivered to Brinks, Hong Kong in an exchange for physical, that's being trucked over to the Shanghai Gold Exchange. They are using the suppression of the Western market against us and standing for delivery. We just saw the other day another huge delivery coming out of the June contract for gold. It was 30,000 gold contracts were delivered off of COMEX in the June contract, 30,000 times 100 ounces. We continue to see drawdowns in the exchanges because the world understands this is how they win the game. The countries that are standing for delivery now never did. It is the standing for delivery, the coordination, sophistication, wealth, being cunning enough and understanding enough to understand this is how you beat the West, by standing for delivery in these exchanges. Well, the same thing would be true in a respect with the BRICS Grain Exchange. And I'm going to read something to you here so people understand, they get what's happening, and they're using this leverage against us. They say the BRICS Grain Exchange is likely to change the face of the world grain market tremendously. And this is according to the Russian officials. The existing global grain market infrastructure was formed following the Second World War, when U.S. wheat and corn exports dominated the market. the ministry said. Although U.S. exports no longer play the role they used to, global prices are primarily determined by the Chicago Commodity Exchange. Moscow seeks to move away from trading grain for U.S. dollars in favor of the national currencies of the BRICS member states. The ministry insists that the BRICS countries are the largest grain producers and exporters, but have no leverage to influence the price of the agricultural commodities critical for their food security. The BRICS Commodity Exchange will solve this problem. But this is the point here. The same thing will be true. Look, they now have a commodity exchange, which would be for things like corn and soybean and wheat. Well, you know, what's Brazil doing right now? They're the second largest exporter of corn in the world. They're selling corn and soybeans to China for yuan over the Project M Bridge, sidestepping SWIFT and probably sending that yuan back and converting it into gold on the Shanghai Gold Exchange. Probably those same kilo bars that came off the COMEX. So they're doing that. But what did China do? They bought the LME, the London Metals Exchange, the base metals, right? We've talked about how all of the countries joining the BRICS or the Shanghai Cooperation Organization or the Belt Road Initiative are massively rich in commodities, right? So they're buying the LME, which is base metals. They're draining the exchange in precious metals. And by the way, the LME, which the Chinese own, even though the exchange is in the UK, they're now building warehouses in China to warehouse the metals that are traded on the LME in China. So they're knee deep in base metals, copper, zinc, all that kind of stuff. They are building a grain exchange. There was a report that JP Morgan just came out with, said that they produce 70 to 80% of all the rare earth metals, but they refine 100% of all the rare earth metals. So you got that base covered. They came out and said that this new BRICS endeavor those countries that will be admitted in October will be very strategic in terms of their shipping lanes and their trade routes on top of their natural resources. Do you see how all of these ducks are being, put in a row, one after the other after the other? And what did Zoltan Pozar say? Oh, that's right.
What do you think of Andy Schectman's take? Will the East versus West war end up in a massive gold and silver price squeeze? Will the dollar collapse in 2025 as the BRICS nations take over? Share your honest opinion in the comments section down below. Send a super thanks if you find our recaps valuable, and make sure you see this video right here because it's a perfect fit for you. I see you on the other side.